Okay, this case study of UDIWA is about Oxford Lane Corporation. Their ticker is oxlc. We'll put up the chart here where we can see their numbers, but they're $1 billion company and no one knows. I didn't know what they were before I started looking into. I was looking in for high dividend stocks, and we'll look at the dividend in a second. So what is it? What do they do? Well, this is from their website. Our current focus is to seek an attractive risk-adjusted total return by investing primarily in debt and equity tranches of CLO vehicles, collateral loan obligations, which are collateralized principally by a diverse portfolio of senior loans, and which generally have little to no exposure to real estate loans, mortgage loans, or pools of consumer-based debt, such as credit card receivables or auto loans. Okay, so they're saying that because they're saying they're trying to limit the risk, or also it's actually about exposure, because they're saying like, hey, if you want to invest with us, it's not going to be in these areas in case you've invested in those areas, with a different part of your portfolio investment strategy. What they're saying in English is, they buy debt and they're getting a large payment because that debt is risky. It's a high rate of return. Okay. Risk adjust, they're saying things that hey, they're smart. They're going to make sure, the loans are backed, they're collateralized, they're backed by assets. So if things go wrong, we won't go that wrong, but no one wants things to go wrong. So, this is their business model. And then, let's look at that dividend. The dividend is 18, 17, 19%, whatever it is. The first time I saw that one, whoa, what is that? Like Roger Rabbit kind of thing. So is it a dividend trap is the lesson? Because one, all right, even with reading that, I just still don't really know what it is. You don't know exactly what it is. Yeah, I saw the chart, the numbers, and that dividend, and the point. All right, so what's a dividend trap? A dividend trap is a company that has a high dividend, but they have a high dividend usually for the wrong reason, and that's because they had a normal size dividend. It all changes depending on what year you're in. But let's say like a normal dividend is 2%, 3%, 4%, somewhere around there. And maybe a company has something that's 7, 8, 9%. And the reason why it's that way, because their stock price, the dividend yield, their stock price has been falling for, bad reasons. So the dividend yield goes up. So a lot of people see that though, and they go, oh, look at that dividend. This is going to be a good investment, not knowing that it's going down and it's probably going to keep on going down. And so then at the end of the day, your investment, you lost money. Sure, you had that dividend, but it kept on going down and down. AT&T is a good example of that. There's a lot of good examples of it. So anyway, is it a dividend trap? Well, I was attracted by the dividend, that's for sure. I look back and I don't consider it that much of a dividend trap, because I knew this was it was an investment, but it was also a little bit of a gamble, where I saw it was higher stock price before. I bought it in 2016, 2017, around there. It was for, I think, $9. Right now it's at $5. So it's lost essentially half of its value. But the really interesting thing, and I bought it, back then it was might have been paid quarterly. Yeah, it was paid quarterly, but now it's monthly. At the end of the month, I'll get I'll put up the dividend. I'll get $40 at the end of each month, which is nice. This is actually one of the parts. It's hard to articulate because of making finance fun, because it's great receiving that dividend. And, I justify where I say, oh, that $40 went to my cell phone bill or whatever. That's the way I'm mental jujitsu of having fun with it. But I just crunched the numbers on my initial investment, and here I'll show, I think I invested, it was like 4,000 or something like that, and now it's worth 2,000. Yeah, so I lost like half percent. I just crunched the numbers though with the dividend payment on all those months, and yeah, I'm ahead. I'm ahead by looks like 16, 1700. And then I guess you look at it that I'm going to hold on to this forever. It very well might go to zero. So there's that. But I don't consider it a dividend trap because of the fact that like I wasn't thinking I was investing in Caterpillar or Walmart or anything like that. I was investing in something that I didn't know that much about. I just saw the numbers and went, okay, all right, let's take a gamble, and I like it. I'm having fun every month, just getting that little income. So the lesson is, one, just realize there's this thing called the dividend trap. It did motivate me with this stock, this purchase. It is something that I don't regret because I definitely learned from it. I'm actually on the green. It could have been a lot worse. It could have gone to zero. It could go to zero next month. But the other big lesson that I just want to teach with this case study is, for the longest time, let's see, if I bought it like $9. Yeah, it was up 10, 11. Oh boy. And that is one of the best feelings in the world. I'll talk about this at length at another time, but it's that when you buy a stock, the capital, the price appreciation goes up and up and up, and you can still rely on that nice dividend. It's a good feeling, and you feel like a genius. You feel like the smartest person in the room. With Oxford Lane, I thought I was the genius because it was something that no one knows about. You're going to probably look it up now. Maybe you'll take a look. I don't know. But it was one where it had this high dividend of 15, 16% at the time. And I bought it at $9 and it went to $10 and $11, which is a lot when when it's just that small of a price per share. But I felt like a genius. And the thing that I want to teach with also that dividend trap is, and I'll say this a bunch, even if you in your heart of hearts think you are the genius, don't think that way, especially with investment strategy and your investments, and that you cannot be wrong. We're all going to be wrong at one point or the other. The important thing is to learn from it, and the important thing is also to just keep yourself in check. So we're gonna increase our net worth. We're gonna have fun with this. Going back to the thesis, and I really think that this can help you. And I think there's going to be other Oxford Lanes out there where you might see that great dividend and think, ooh. But the important thing is, again, stay humble. You're not the smartest person. Do your due diligence. And then the last thing is that I was in a somewhat good point at when I bought this. I didn't know the company, and I didn't know that much about it. And so this is part where it does get into a little bit of I use the word experimenting, gambling, experimenting. You're seeing what's out there. And then the other thing, and this is going to sound nerdy, but start learning about it. That's what I was. Look up their website. Look up what they're doing. I was definitely intrigued. Can I tell you exactly what they do now? No. But again, I was looking at it more of all right, let's test our just with a little purchase here. And just in closing, again, going back to the thesis of having fun with this stuff, and here you can say, oh, look, you lost money. Well, you lost capital appreciation with the stock purchase, but you made it back on the dividends. And so this was a mixed bag, but I had fun. I'm having fun with it. It's nice receiving those dividends at the end of each month. Yeah, it's risky. Yeah, I still can't tell you exactly what the company does, but it's. I'm having fun with it. It's one of those things too that if you probably don't want to hear, losing money is fun, and it's not, but you can learn from it. And this is one of those times where I will definitely be more cynical when I see a stock like this with such a high dividend than I was, 8 years ago or 7 years ago when I bought it. So, all right, let's keep it fun. Let's keep going, and I'll see you in the next video. All right, that's the episode. Please subscribe, like, and comment any questions or topics you'd like me to cover in a future episode. Log on to Funnance.com to learn more, and let's have fun with finance.